Welcome to another episode of Business and Life Advice with Ataande Advisors, where we dive deep into business, leadership, and life advice. Today, we'll be exploring several critical topics on pricing, negotiation, managing high-performing yet inconsistent employees, and the importance of slow thinking and long-term decision-making. Hello, everyone. I'm Achumboro Ataande, the founder of Ataande Advisors. We specialize in business and leadership coaching. This podcast is dedicated to helping entrepreneurs and aspiring entrepreneurs navigate the complex world of business with practical advice and insights. I'm a four-time entrepreneur, angel investor, attorney, adjunct professor, but I'm here to answer your questions. And today we're going to be reacting to some videos we've seen on the internet and giving you our insight on them. So let's start with a video on anchoring price in negotiations.
How long have you been running your business?
A year.
I don't know if you know this, but I do business coaching one-on-one. I charge $1,000 an hour, but I'm gonna help you out. How much can you afford? You see what's happening there? It's called anchoring. Whoever says the number first, you're thinking about that number, right?
Yeah.
I'll give you another example. There's this thing called heuristics, and it's just a shorthand for you to remember things. So whatever you say first, people get stuck on. So when a client goes in and lowballs you, you kind of just ignore it. The one thing that you can do as a strategy is to say, that's not gonna work. Can you come up with another number? So you let them negotiate against themselves. You can't even enter it because you get stuck on that number. So say your number first and say it high.
So anchoring involves setting a reference point around where negotiations revolve, right? So the first price mentioned can significantly influence the final outcome. Think about this. How many times do you actually know how much something has cost, especially if it's a new product or a new service, right? Typically, you learn about how much it costs by seeing it or hearing the price from someone else. So this is how you can utilize anchoring to help people think about your price, and then you'll negotiate from that point on. So this tactic has been used for centuries, dating back to ancient bazaars, where merchants would set high prices initially and then knowing that they'll be negotiated down. For example, in Middle Eastern souks, it was common for sellers to sell prices significantly. I remember when I was in one, somebody was trying to sell me a rug for $2,000. I had no idea how much these rugs cost, but in my mind, it's like, oh man, these rugs must be really expensive, and they said $2,000. And I almost bought it because it came down to $200. But that's when I realized that they were really using this information asymmetry against me. And that's how you can utilize it, right? By setting prices high, you can eventually help people come to you with a price that better matches the services and qualities you can give. So to set an effective anchor price, though, you need to do market research, because one of the worst things that can happen here is you're charging XYZ and then somebody sees it later and they just feel they got ripped off. That means they'll probably never do business with you again, and also they'll never refer people. So I'll say always do market research to make sure you're setting your price in the realm of what is realistic. And there's a whole course about what's real and what's realistic and what's not realistic. I won't dive into, but that's something to think about, right? So this happens everywhere. This is something that I really think we all should look into. But definitely when you're negotiating, when you're letting people out, just throw it out and say it often, because the more people hear it, there's also anchoring, but the more they hear it, the more it crystallizes in their mind. So saying this over and over and over, people can come to expect this is how much you're charging. So if you want to give a discount, now they even value the discount more. So next, let's watch a video about dealing with a superstar employee who's inconsistent in their performance.
Hey, Dave, how you doing today?
Better than I deserve. What's up, man?
Awesome. So we're an HVAC contractor, mechanical contractor. My question is, how would you deal with a high performer, somebody who goes out and kills it every day, or 60% of the days? And if I can just color it in a little bit, like their 60% is better than most people's 100%, and they're industry leading when they're on, but then they just seem disinterested, the other 40% of the time. So would you offer them flexibility? How would you deal with that employee?
I just have a low tolerance for lack of ambition and motivation, personally, so it would be hard for me.
So this is true. I have a low tolerance for that as well, but let's be realistic about it. Depends on where your business is at in your business life cycle, right? If you're just beginning, or if you're in a tough place, it may be difficult to let go of a star employee, even if they are not performing to their potential. So I would say it's challenging, right? Managing high performing yet inconsistent employees can be challenging, right? As we saw in the video, these employees can be a real asset when they're performing at their best. There's also historical examples, like let's say take Steve Jobs, for example. During his early years at Apple, Jobs was instrumental in developing groundbreaking products like the Macintosh, but his management style and interpersonal relationships were often turbulent, right? So despite his inconsistencies, his ability to drive innovation eventually ultimately led to Apple's success, right? I'm not saying everybody's Steve Jobs, but that's something to think about, right? Now, to manage such employees, you need to set clear expectations, right? Provide constant feedback, offer incentives for consistent performance, right? So, hey, look, I know you're hitting this, but if you hit X, Y, Z, then you get this bonus. And so that's the motivation element that you can add in. So think of it like managing a star athlete who performs brilliantly in key matches, but not consistently train as hard. So coaches often work to maintain motivation and discipline. And as a boss, owner, manager, leader, you are a coach, right? So that's often our jobs, right? And it's important to create an environment where superstar employees feel valued and understood. For instance, you can set up one-on-one meetings to discuss their performance and identify areas where they can improve, right? Additionally, offering opportunities for professional development growth can keep these employees engaged and motivated. Now, why am I? It may seem that I'm pandering or we're really pushing it. Sometimes you really, it depends on your culture, right? It depends on where you're at. And I know a lot of businesses in this day and age is struggling to bring in revenue, to keep things afloat, to be profitable. And therefore, if somebody's really moving the needle for you, even if they're underperforming based on their ability and potential, you may want to keep them on because they're moving the needle so much. However, I've given all the pros. We have to think about the cons with this, right? What is the impact on the broader environment, right? Now, do your other employees think you're being unfair? Or do they think, hey, I should be paid because I'm performing 100% all the time? Is that going to seep into your culture and have a total net loss, right? Or do you want to set a precedent for that everybody has to strive for excellence, and it doesn't matter how good you are if you're not giving it your all every day? Is that something you want to set? But if you're doing that, I would definitely say look at your balance sheet, look at what's going on. I'm not here to just give you advice that sounds good. We have to make sure your business stays running and actually grows for the future. So sometimes it might mean, hey, taking $1 million loss. But other times it may mean, hey, we have to ride this out. I'm going to deal with this even though I don't love it because I need to get to these next 2 milestones so we can have a chance to really become this great company. So that's how I would look at it. I have removed people who are not ambitious enough or motivate or consistent enough. I've also looked at people who are performing well and kind of try to figure out how to work around their inconsistencies. So it's situation based, and I wouldn't say that there's a rule for every situation. Now I have a question for you. Do you have a superstar employee with inconsistent performance? How do you manage them? Share your experience in the comments. So now let's watch a video about the pitfalls of fast thinking in long-term decision making.
The biggest problem that people have is that where they should use slow thinking, they use fast thinking. And entrepreneurs are extremely guilty of that. Is we make important decisions that have long potential consequences. We make those decisions with fast thinking when in reality we should be making them with slow thinking. Now, the best decisions you make are where you really take your time. Fast people decisions are invariably wrong people decisions. Hiring an important person for an important job has tremendous potential consequences. So therefore, you need to take a long time. One of the things I teach is a simple rule that will increase your hiring accuracy to 90%. Some of the best decisions that you make will be decisions that you will allow to steep for a while, like watering tea. So remember, anything that is important that has long-term consequences is a candidate for slow thinking.
So that video highlighted some crucial points about fast and slow thinking. Fast thinking is intuitive and quick thinking, while slow thinking is more deliberative and analytical. Now, while fast thinking is useful for routine decisions, it can lead to mistakes in complex long-term decisions. So let's consider the Apollo 13 mission. During the crisis, the mission control team had to shift from fast routine decision-making to slow deliberate thinking. Their careful analysis and systematic problem solving ensure the safe return of the astronauts, demonstrating the importance of slow thinking in critical situations. So in business, especially in hiring and strategic planning, slow thinking is crucial to avoid costly mistakes, right? And long-term mistakes. Successful entrepreneurs need to balance intuition with thorough analysis. So sometimes we have to slow things down and really dive into the details and think through what are all the implications of this decision? What are all the options? And what can we do with the resources we have? For example, when deciding to enter a new market, it's important to conduct extensive market research and consider various scenarios before making a decision. One notable example of slow thinking in business is Warren Buffett's investment strategy, right? So Warren Buffett is known for his patient and methodical approach to investing, often taking months or even years to thoroughly analyze a potential investment before committing. This careful deliberation has contributed to his long-term success and reputation as one of the greatest investors of all time. So, what decision you wish you had spent more time thinking about? Let's discuss it in the comments. And if you're finding this podcast helpful, make sure to subscribe and hit this notification bell. So next, let's watch a video about why you should choose higher quality over lower cost in business.
There are 3 rules for success in business. Number 1, always choose higher quality rather than lower cost. Most companies think the way to sell more is to lower the price. But the true reason for success, and there's years of research, is to improve the quality of your product. The second rule is to focus on revenue generation rather than on the costs of your business, rather than on the price that things cost. Focus on revenue generation. And rule number 3 is that there are no other rules.
This video made some excellent points about the long-term benefits of focusing on quality. So high quality products can command higher prices and bigger profit margins and build customer loyalty. For example, right, Toyota's rise to prominence is a prime example. In the mid-20th century, Toyota focused on producing high quality, high reliability vehicles, contrasting with the prevailing industry trend of cost cutting. This commitment to quality led to the development of the Toyota production system, which emphasized continuous improvement, Kaizen, and defect prevention, right? So with that, what has happened? A lot of people, they want to buy a Toyota, right? They want to buy a Toyota because they believe that it'll last long. So this is something, instead of cutting costs so because you think people buy more of it, sometimes it's improving quality and giving them more bang for their buck. That's another thing to do. Now, investing in quality not only improves customer satisfaction, but also reduces long-term costs associated with returns, repairs, and negative word of mouth. So we talked a lot about improving quality. Next thing I wanted, so as business owners, we need to invest in things. We need to buy things. We need to, for equipment, we need to hire people, etc. Sometimes people are often looking to, hey, what's the least expensive employee I can get? What's the cheapest equipment I can get? That's one of the worst ways to look at things. Now, it depends on your situation. Sometimes you can only afford X, Y, Z. However, when you can, or even if making a way to find somebody, maybe they're 20% more expensive than the average employee, but usually that means they're an A player. A players change the game, right? A simpler way to explain it is in printers, right? A lot of printers, you can buy a cheaper printer for $20, $40. But what happens when you buy cheap $20, $40? It runs through ink cartridges, and you're going to spend a ton on ink cartridges because it's not running efficiently. So you're paying a lot on the back end because you wanted to cut price on the front end. And that's what typically happens with most investment decisions when you go for cheap. So one of the best things we can do as entrepreneurs is looking, hey, what is the total price of something? And compare things based on that. And then after looking at total price, looking at what is my ROI, which I think is even more important than total price. What's my ROI? Am I getting a 1x, 2x, 3x, 4x, 10x return on something? And making decisions based on that. And even if you can only afford a small portion of that, then you can build in, and you know how it's a different game managing high quality products or services than it is managing low quality products or services. And the quicker you get used to doing it, the better you can scale, in my opinion. So what can you do practically? What can you do on the quality side? You invest in quality control, research and R&D, research and development, and listen to your customers. Right. My question to you is now, how do you ensure quality in your business? Let us know in the comments. And if you enjoy this podcast, please like and subscribe. Now let's watch a video that discusses the idea that everyone can be an entrepreneur.
Do you think everybody is cut out to build and run a business?
Yes, everybody should be rich.
You think that?
I know where you're going. I've heard this question many times. It's just not true that people cannot run a business. And I'm not selling a course, but I will say this to you. No one's born a doctor, no one's born a lawyer. And doctors and lawyers have groups of people that help them be doctors and lawyers. There's different types of doctors, there's different types of entrepreneurs. There's different types of skills that you have that are applicable to entrepreneurship. Right? Mm-hmm. So my partner in one of my previous businesses, she's a graphic designer. She didn't think she was an entrepreneur. She's a graphic designer. I'm like, you're an entrepreneur. You just need to team up with someone that likes to do marketing and sales. Everyone is an entrepreneur. It's just a structural thing. Yeah. It's not an ability thing.
So that's a very interesting take. I'm stuck here because I don't believe everybody can be a founder. And I wouldn't even say everybody can be an entrepreneur. I think people can be managers. I think people can be CEOs. I think you can teach many of the skills of being a business owner, being a founder, etc. I just like schools that popped up in the late 20th century, and institutions like Harvard Business School and Stanford began offering specialized programs on entrepreneurship, right? That focused on teaching skills and mindset necessary for starting and growing a business, which includes innovation, risk management, strategic planning. There's some things that are central to running a business or starting a business that I don't think can be taught. One of those things is grit, right? Grit. How are you going to go through tough, trying situations, right? How are you going to go through and get through to the other side? It is tough running a business. So that's not something that can be necessarily taught in school. It's how many times can you get punched in the face, right? And will you keep on getting up when everybody's telling you should quit? That's something that isn't taught. And so that's where I disagree with it. I think there's further things like being willing to risk it all. That's not a skill, right? That's something more internal. That's something, whether it came from life experience or it was innate and born with, I can't speak to that. But being willing to risk it all, being willing to leave a cushy job to go chase a dream, right? Where you may not have any prospects and there may be this huge company in your way and people like, hey, this is crazy. No, there's 10 other people doing this. Why will you succeed? Or nobody else is doing this. Why will you succeed? So I don't agree that everybody can be an entrepreneur in that fashion. However, I do think people can run and manage business and can be entrepreneurs, right? They can be entrepreneur within a company. And the reason why that can work and those skills can be taught is because now you're taking away a lot of the other risks I talked about. The people don't have to worry about, how do I start this from the bottom? How do I go to 0 to 1? Going 0 to 1 is very hard. How do I figure this out? Oh man, am I going to have a salary to be able to take care of my family? Am I going to be able to eat tonight? Those questions are kind of answered already. So you can give people the strategic planning skills, the financial skills, the marketing skills, the sales skills, the leadership skills. Those things can be taught. But the other skills that are about grit, that's about being willing to risk it all, though that's not something that you can teach everyone or most people. And I would say it's not even something we want most people to do because it's a tough role. ROI, most people, you hear of Mark Zuckerberg, but usually people are not hitting it till they're in their mid 40s, 50 years old. So they've been doing this a while. They may be working on their 17th business before they're actually successful. So if you dig in and looking on the real stats in terms of how these people who look super successful who are super successful, how many times they had to quote unquote fail to get there, I don't think I don't think you can teach that to people. My question to you, what entrepreneur skills are you working on? Share your journey with us in the comments. Also, let us know, do you think people can be taught to be a founder or an entrepreneur? Do you agree, disagree? I want to know your thoughts. Thank you.
5 mistakes you should avoid making in your business. Firstly, not having a clear control over your lifestyle costs. Secondly, thinking you're above criticism and you know it all. Thirdly, mismanaging your stakeholders and relationships you have with other human beings. Fourth, not having a clear control over your business cash flow and liquidity. Fifth, and most importantly, cash that is flowing is more important than cash that is static. You want your business to be operating 7 days a week, 24/7. Avoid making these mistakes in your business and you'll be successful.
So I agree with a lot of this. I would say the only thing I would say is it's not everyone or most people's businesses are not operating 24/7. I'm trying to build a business that's operating 24/7, but it's a rarity, right? So what does that mean? That means either you're having sales 24/7, you're open for business 24/7. Maybe you can say that's happening with a Shopify store or people doing e-commerce. You have your operations operating 1/3 of the day or 2/3 of the day. Then you have your finance operating another third. Then you have customer service. But most businesses are not operating 24/7. So that's something that's the one thing where I'll push back a bit on this. I would say I don't want to say it should be, but it's something to aspire to have a business operating 24/7. Thank you. I think those were the other points were great, especially investing, right? Not having static money, just money sitting in the bank. Your money should be working. They're soldiers, right? They're soldiers for you. So you should be utilizing them and working, send them out the door. Or if they're here, it's kind of like you have a standing army to protect you in case somebody comes to fight you. But I think other than that, the points were spot on. And it's just a little bit of a difference of opinion on the last point. So let's watch a video, which is a cautionary tale about a $3 million business.
I was the president of a company that my husband and I built with our blood, sweat, and tears. We had 34 employees, and our most recent annual revenue was $3.5 million.
Mm-hmm.
We had a bit of a situation. We started the company before we knew you, and we had 2 minority stake partners. And it turned out to be a terrible decision with them, and they basically stole our biggest clients from us. And we found out the only way that we could move forward was to dissolve the company because they would not let us buy them out.
Well, that's a tough story. That's a tough story. I've had my own situation that's similar to that a little bit. I'll explain that later, but this highlights the importance of protecting your business interests, right? This couple who had $3.5 million in business had their 2 biggest clients stolen by their minority business owners. So one of the things that you can do in these situations is, first, when you're entering in a business agreement, there's a few different things from a legal perspective. One, always have your own attorney. Hire an attorney to speak, to negotiate on your behalf and draft things out. Because even if you love these people, they're your best friend, they're your neighbor, they're your cousin, etc. It's good to have things written down in case something happens and people forget. Let's not even talk about bad intention. People forget, it's written down and you can go back to the document, which is enforceable, right? Another thing that happens is you want to, especially with minority owners, it depends from business to business. You may want to have non-compete agreements, non-disclosure agreements, which are essentially confidentiality agreements. You may want to limit how they can utilize information, right? Limit their contact or what they have control over, whether they have access to the bank accounts, whether they have direct access to clients, whether they can be in the same line of business, right? These are things you want to have on the table and know that. So there's a legal component of running this through your attorney. There's also another component, especially with partners. I'll say run background checks if it's legally permitted. Run background checks so you know this. Get some background checks, reference checks. Do whatever you need to really understand, hey, who is this person I'm getting into business with? Because a partnership is a very big deal, right? Adding somebody to your cap table or adding somebody who has some control or deeper level of insight into your business is a very big deal. So it may seem like, hey, you're doing too much, but there's too many of these things happen. I'll share a story that happened with me. I had a previous business partner who embezzled. Essentially, she cleared out the whole bank account, right? She cleared out our whole bank account. We were working to dissolve the business. We're working to dissolve the business. I had brought in a bunch of clients. She wasn't able to bring in clients, but because I just went in with, hey, I thought this person was great, let's do business. I went in with a different understanding, I guess, than she did in terms of what is required of running this business and running it well, and what each of us are required to do and how the splits will occur in that stage. And when she was walking out and she was trying to demand more than she brought in, or more than her words to split? And I was saying no, and we had a pause. So essentially, I wasn't able to use the money I could have used it, but just how I like to do business, I didn't. So for 3 months, we essentially had a pause until she wanted to leave the company. And so as we're doing that, this person just pulled all the money, and that's on me. I probably maybe should have froze it or done something else. This person pulled all the money and just wiped the accounts after I told the person, no, you're not getting XYZ because you haven't brought in any clients, you haven't serviced any customers. I don't understand how you're expecting this. Literally, we had that conversation, I think, about 9 p.m. Well, we had the concept, and then we had this is the interest conversation, 9 p.m. That night or that morning, she pulled it, and I got a message in the morning. Hey, yes, I didn't like the way you were talking, so I pulled all the money out the account, and I had to go back to my attorney side. Thank God that was able to get all the money back. But these are some issues that happen, right? These are some issues, and there's a lot more embezzlement. There's a lot more people stealing clients and running off to start their own business. So the best thing you can do is, one, run background checks on the person, and two, talk with an attorney, right? If you're getting into a partnership relationship, right? And now let's take it up to the corporate level. You see this happen all the time. So consider the collapse of Enron, right? The major energy company, which fell due to widespread accounting fraud and unethical practices by its executives, right? It had internal management failures, right? And a lack of oversight. So that's a lack of oversight led to one of the largest corporate bankruptcies in history, right? So this shares as a cautionary tale about the devastating effects of internal conflicts on the mismanagement of a business, right? So once again, to safeguard your business, it's crucial to have clear contracts, non-compete clauses, and regular communication with clients. I didn't talk about that before. Regular communication with clients, especially if you're the majority owner, so you can kind of get a temperature of what's going on if somebody's approaching them in a way that's of disrepute, right? So those things as well. Maintaining a strong ethical foundation and transparent management practices can help prevent internal conflict. So one thing, so I have several other businesses, and I have some businesses with some people who I fully trust and who fully trust me. But one of my things about, hey, if you're a partner with me on this at this level, you have all the access and you can look at the bank accounts at any point in time. So each of them has viewing privileges on the bank accounts, transaction history, etc. So even though these people trust me with their lives, I say, nope, there's certain ways I like transparency. I like things that, so if anything ever gets gray, they know I've always been super transparent, right? So those are some things I'll say to think about. It's hard, it's more work. I know it may seem like, hey, this is a bit much, but in the difficult world of business, which interacts with the difficult world of relationship, this is vital because you're putting your blood, sweat, and tears, right? This is your dream. This is your baby. So let's make sure you're securing that. Let's make sure you're protected. Let's make sure that you come out and you get everything you have earned. All right. So thank you for joining us on another episode of Business and Life Advice with Ataande Advisors. We've covered a lot of ground today, from negotiation strategies to employee management, to making decisions to protect your business, right? So remember, the key to success is continuous learning and adaptation. So I would love to hear your thoughts and experiences on these topics. Please leave a comment below. Also, don't forget to follow us on Instagram at Ataande Advisors. Just look us up, follow us, and we'll give you more updates. We update there more frequently than we do our weekly episodes here on our podcast. But also, if you like these reaction videos, I know we did a couple different things. The last 2 videos, this video where we're going off reaction videos, the previous videos where we took in written questions. If you like that, please let us know so we can continue doing more of that. Thank you so much. I appreciate you coming to watch it, and I can't wait to read your comments and look forward to responding to many of them.